Hello and welcome to this latest MoneyAge video interview. I'm content editor Dan McGrath, and today I'm joined by the Chief Operating Officer at Black and White Bridging, Damien Druce, and Head of Development Finance at Empire Global Finance, Pete Williams. Black and White Bridging, formerly known as Bath and West Finance, launched in 2021 and provides short-term bridging loans across the residential and commercial sectors. Since its launch, the firm has lent over £300 million to borrowers, and in the last 12 months, it has lent more than £135 million. In today's interview, we'll be exploring the role of the short-term bridging market, the importance of a people-first approach within the sector, how AI can shape the bridging experience, and the ways in which recent government legislation has impacted the industry. Okay, so Damien, Pete, thank you very much for joining us today.
You're welcome.
Fantastic. And to kick things off, what role does the bridging sector have in the current lending environment?
Well, for me, I feel like they're ultimately filling the gaps between the high street banks, the challenger banks. They've kind of left that behind quite a lot. I mean, I think those banks are still very, very cautious, certainly in a post-COVID and then a post-mini budget environment. They're super, super cautious. Whereas perhaps bridging was maybe the niche item historically. It's more a mainstream go-to for fast-paced lending, quirky transactions. I think it's become more of a norm than it is a niche.
I would agree with that. It's definitely more mainstream now than it's ever been in the past. It's definitely a mature market now. It's stood the test of time as well. It's helped through economic cycles and difficulties. We all know what it did post the GFC. It filled the gap there, as Pete's just said. Did the same after the Brexit result. It helped in the post-COVID years. So it has stood the test of time. And just to follow what Pete said there about the challenger banks and the banks, I think the challenger banks are very vile in terms of their position in the bridging market. Pricing is always very, very sharp, but they sometimes lack a little bit of commerciality and speed. Just sometimes, not all the time. And I think that's where the specialist lenders, that's where they really stand out.
Yeah.
Okay, that's brilliant. And how do you think Black and White's approach differs from other firms?
Are you asking me that question?
I can put it to both of you.
Well, I think Pete would be as the broker, and to be slightly more impartial, I think Pete would be the best person to answer that question.
Well, I feel like Black and White, they take a very human approach to looking at transactions. They have got their list of criteria, as does everyone. But what I quite like is the way that they'll look at a set of circumstances, they'll understand it very, very quickly, and they'll look for a way to make a loan work, as opposed to a tick box exercise where if you don't fit into this set of criteria, we can't talk to you. I like the way they look beyond just the asset. They'll look at the client, they'll look at what he's trying to do going forward, they'll look at how they can support someone that's got perhaps more experience than someone else. They'll look at a larger picture. It's kind of quite transparent lending. I like the ability to be able to talk to decision makers. I like the way if someone tells me I'm talking to a decision maker, they make a decision, as opposed to getting lost in the ether, telling me it's a decision maker, and actually their set of criteria has already made the decision. Which kind of works for me, which is why we're working so well together.
Well, so I guess a question back to Pete then on that one, really, that you said about our ability to look at the circumstances and find a way to get a deal done. I know a lot of the time, the mechanism that we use for that is condition subsequent. So wherever we can, we'll condition certain things to post-completion just to expedite matters and keep the deal moving. And we get a lot of criticism internally from the portfolio management team on that. Do you think that's an effective way for us to progress deals through, or do you think we over-condition?
No, I think you've got the conditioning about right. Over-conditioning just means that the transaction kind of stops in its tracks, whereas you have a nice way of maintaining that momentum. I think once you've got a client on board, the market is very, very, very competitive. If you can keep that rhythm and that interest and that spark and that kind of that whole transactional process going, you keep them very much interested and very much focused.
Mm-hmm.
I think if it goes too quiet for too long, there's too many other people out there that'll just go elsewhere.
Yeah. And when we have got things wrong, because we're not perfect, we don't get everything right, we engage with all stakeholders. Typically, the broker is our customer. Is our customer rather than the borrower. The borrower we view as being the broker's customer. So we'll engage with the key stakeholders, i.e. the broker, and we'll ask them where the problems lie. And one time, Pete kindly agreed to come onto one of our group sales and lending team calls and gave them some honest feedback in terms of where we were letting ourselves down, where he felt standards were slipping a little bit, and we addressed that. So we've got that very, very, like Pete said, personal approach in terms of people first, and we're very, very flexible, quite malleable. We'll try and find ways to not just move deals on, but if a broker feels like we're going a little backwards, we'll get ourselves back on track and keep pushing forward.
Yeah, I kind of like the way that you kind of hold your hands up in those circumstances. When I get a lot of lenders, as soon as a transaction goes through, you get a little email saying, "Oh, can you rate us out of 5? Please rate me out of 5." And you just kind of roll with it.
Yeah.
I kind of don't feel like anything happens if you give them kind of less constructive feedback or kind of more feedback where you're kind of telling them they haven't done a good job. Whereas I have to give Damien his dues. I can phone him and say, "Listen, I'm not particularly happy with the service levels here. You have taken a nosedive. These are my clients. They're important to me at the end of the day. So I need you to look after them as well as I do." And the instant reaction is, right, let's get stuck in. And I'm part of it, watching him tell the team how they need to improve. So it's nice to be a part of that, as opposed to hearing people say, "Oh, well, we'll change," but you never see it. And
Yeah, that's great. And the people first approach is something that we're going to come back to later on. But the idea of adaptability, I think, within the sector, how important are varied investments within the bridging sector?
Well, adaptability is crucial across the transaction, in any bridging transaction, because a broker might need to change course. They may need to change direction. Circumstances may materialise and come to light that they weren't aware of when the deal first started, and they've got to make a change. And I think that flexibility must be across all parties. Sometimes the borrower might have to do things a little bit differently than they planned, and if that flexibility remains, then it just keeps deals moving. At the end of the day, we see an awful lot of business. We see an awful lot of inquiries. Everything is trending on an upward direction, but we don't get paid on inquiries. We don't get paid on receipt of an application form. We get paid all sides when funds are deposited with the borrower's lawyers.
yeah,
And that is our end game. That's our goal always. Have a plan, stick to it. If the plan changes, that's okay, but never let your goal alter. Always aim for that kind of successful outcome. That's when things happen. It's when the broker gets paid, and it's when the borrower goes and makes things happen. Maybe an acquisition of additional property. Whatever the deal may be, but it's just having that fixed end goal in sight.
Yeah. And diversity in the marketplace is also important. I mean, at the end of the day, if everyone just did vanilla resi, we'd have plateaued a long time ago, wouldn't we? Let's face it. But I mean, bridges are kind of becoming very much focused on not only the vanilla resi, but the more complex resi portfolios, development, land with planning, complex commercial structures. They're really, really getting stuck in. And it's really nice to see.
So we've touched on new areas of the market that are coming through. Obviously, AI is a big part of everyday life now, I think. What role do you think it has within the bridging market?
Well, it was about to come up, wasn't it? Let's be honest. And it was going to get discussed. It's on everybody's lips at the moment, and in our business, it's provoking a lot of very interesting discussions. As I've said, we're flexible, we're malleable, but for me, AI is wrong by the very nature of its name. How can something be artificial How can it be reliable? So for starters, it's positioned itself wrong. For me, it's more automated intelligence rather than artificial. And then the kind of analogy that we do use a little bit internally is we are people first, as we discussed already, and people need to remain at the core of everything that we do. So AI for me is about, if I give it to you in a simple black and white internal type conversation, our lending team and our brokers and borrowers, they're making a cake. Yeah. And AI for us is not going to make that cake. It's just going to finish it off. Might be the icing, could be the cherry, but AI is that. That's its role. After the people have done what they need to do, so they've understood the risk and they're just using AI as a kind of like, as a final box tick.
Yeah.
AI, whatever you want to call the bot, please check my credit paper to make sure I've not missed anything. Please check my credit paper for grammatical errors. I'm okay with that, but it has to be still human decision making.
Yeah, I'd agree with Damien. I mean, it's not there to replace humans. And I think certainly the bridging market, and certainly the property market, it's got too many quirky nuances to completely rely on AI. I guess my biggest worry is certainly as AI takes a foothold, there's a lot of people who are using it perhaps don't have as much industry experience. So they've got no ability to check the work that the AI has produced. I'm starting to see kind of credit papers and I'm looking at it and I'm thinking, you've kind of missed half the story here. I mean, there's nothing about the UBO's experience. There's nothing going on, nothing that talks about what he's going to do outside of this very focused property transaction, or there's a lot it misses. So for me, it's purely there as a support role. If it helps you do something a little bit quicker, or it's able to check some of your work, fair enough, but it's not there to replace humans by any stretch.
So we're coming back to where we were earlier, how important is a people-first approach within the bridging sector?
It's vital. It's built on people.
Yeah.
If you think about a transaction, there aren't robots and machines everywhere. So it's literally probably one of the most personal touch products in financial services and lending, really. So everywhere we go, we've got our broker. That broker might have a broker. There's two people, an RM, a BDM, a lending manager, because we don't have two tiers within our loan processing and an underwriting department. Lawyers, surveyors, borrowers. It's people. And if they're building houses, they're not building them for robots to live in. They're building them for people to live in. So it's very, very, very much a people-centric industry proposition, and keeping that personal touch, that people-first approach. For me, black and white is absolutely crucial.
Yeah, I'd agree with that. I mean, at the end of the day, this isn't just blind series of blind transactions just to put money in your pocket. It's having that relationship with professionals in the industry, having that relationship with your client in the first place, the borrower. You've got to be able to get as much information out of them as possible. What's important to you and why? Why are you doing this? And should you be doing this? I mean, at the end of the day, lending money can be very dangerous, especially if you're securing it against assets. Get it wrong, they're going to get repossessed. That can have a knock-on effect. That can send people bankrupt. So it's absolutely vital. And then the relationship that we have with solicitors and lenders. There's a lot to think about. I mean, we have to look out for financial crime. And then we have to have a working relationship to be able to see those. I mean, because criminals are very clever these days, and we've got to be able to see those nuances and stop them at the earliest possible stage. Is there going to be a problem with the transaction going forward? So these relationships protect everyone involved, everyone from the borrower to the lenders, to the brokers, to the solicitors.
Yeah.
So those relationships are absolutely key going forward. You've got to have a group of people you can trust and work with.
And going back to AI, it can't do that. It just can't do it. Not yet anyway, and I'm pretty sure it will evolve over time, but it's got to learn itself. It's a bit like a baby. It's going to have to mature a little bit and grow before it can start to make big decisions. You don't let your 10-year-old child tell you what you're doing, or give you, unless they've learned something new at school that day, of course, which is groundbreaking and revolutionary. It's got to find its way, and the best way for that to happen is through people. People.
I'm not convinced that AI, because there's a lot of poor information on the internet out there, and I'm not quite convinced yet that AI can sort the difference between what's valid, what's not valid, what's correct, what's incorrect.
Yeah.
It boils down to some of the people when I ask them to check the draft or the document they've written. I would rather they learn their way without AI, and then they've got the ability to check what AI has done for them.
It's amazing how AI and people are like the conversation. It's just one, isn't it, really, if you think about it? Because it's fundamentally underpinned by people, previous decisions, things that they've learned. Pardon me, the things that they've learned. So, yeah, people first, 100% of the time. And again, I like having that plan for the transaction. Have that plan for people, their own, their journeys in life, where they're going. So people first all the time.
Absolutely. And there's a follow-up as well. I mean, one of the things that we do quite well is if on the rare occasion there is a problem with a client, they'll phone me, I'll follow up with the client. I mean, I want that client to have a good journey. I don't want them just to have a transaction into a bridging loan and then that's the last time I talk to them. I want to see them through. They want their money back. The client wants to keep the property. And then we want to help them grow.
Yeah.
Simple as that.
Yep.
Brilliant. And to round things off, we're just over a year into the new Labour government. What do you think the impact has been on the specialist finance industry? Has it been a hit or miss?
For me, I guess it's a little bit too early to say. I guess if they're going to honour some of the stuff they've said in terms of sponsoring the housing market, really driving that forward and pushing SMEs and supporting SMEs, fair enough. If some of their taxation and bureaucracy is then going to hinder that, it could be a waste of time. It's a bit too early for me to say. What I'd like to see more of is certainly central and local government speaking to people like brokers and bridgers and lenders that are on the front line, because we're the ones that are fueling the SMEs at the moment, and I don't feel like we're being spoken to.
Yeah, we tried to. So we've got a connection with a cabinet member through one of our from one of the members of our team, and we did try and facilitate a breakfast meeting with some different industry stakeholders, and it was agreed, and then it was walked away from or ignored. But the fundamentals of it for me and the current Labour government are that they're almost failing across every metric. And therefore, to answer your question, their impact on the property market is miss.
Brilliant. Well, gentlemen, thank you very much. That brings us to the end of today. So, Damien, Pete, thank you very much for joining us.
Thank you.
And thank you to you at home for watching.